What's up, guys? Dwight with Defying Finance. I wanted to talk to you today about why I think the unemployment rate is going to rise, but I don't necessarily think it's going to be because we have a ton of layoffs. I do believe that that's coming, but I think there's an interesting way to look at this. Let me show you some charts here. So, what we're taking a look at here, this is the labor participation rate. So, this is data from the Bureau of Labor Statistics and the Federal Reserve. Okay. So if we take a look at this, maybe you've never seen this chart before. Clearly, we could see the trend going into the late 90s, but it's been collapsing for a long time. And a lot of people will look at this and say, well, that has to do with the growth of wealth that people have had over the years, which, whatever, that's fine, or technology, that's fine. But I want you to notice this. So this level back here is in 1977, right? That's our participation rate. We'll even get rid of just the idea here of the 2020 pandemic. Let's just set that aside for now, right? A little unrealistic when the government forces the economy to shut down. But let's take a look at this. So right now we're back at levels of 1977, and as technology gets better and better, maybe that continues to fall to some level. But think about this, okay? Let's go to, well, first off, right here, this is the U3 unemployment rate. This doesn't include certain people, right? So if you haven't had a job for more than, what's it say? Is it 6 months with this one? Let's see, percentage of labor force, 16 years of age, yada, yada, yada. Anyway, I believe this one's very short term. U6, which is this unemployment rate, you can see is 7%. The headline number you always hear from the news is 3.6%. But this would be people who may be out of work longer, right? So these people aren't included in the U3 unemployment. So it's a little deceiving, in my opinion. But what you've been hearing about on the news was all these job openings. So this is the job opening, total non-farm job openings. And I want you to think about this for a second. So the people who have quit their jobs, you have, I know there's been a lot of young people, especially, who have been quitting because they've been trading stocks or trading cryptos, and they've had these incredible gains, right? And they figure, well, why should I work? I mean, I can make X amount just trading some crypto. I'll cash out a little bit and whatever, right? They're going to live this great life. Good for them. Except now the market's turning and collapsing, right? There's a lot of inexperience here. They're not putting cash on the sidelines to buy huge sell-offs, right? They're all in, and when the market goes to sell off, they get wiped out. Well, taking a look at this chart, you have all these job openings, and what you're about to see, you can see the rounding top we have here, okay? And you can see kind of what happened in 2008. Obviously, we went into a recession. Well, we are going into a recession. I'm just going to say 100% we're going into a recession because the probability is so high. What's the point of saying 99%, right? So a recession would be two negative reports of GDP, 2 quarters of that, which we've already had one. It was a huge miss. I think we're definitely going into another one. But looking at this here, a lot of these job openings you've been hearing about how, wow, there's so many, we're at full employment. There are so many jobs open right now. These are just going to disappear, right? These are like think of home equity, right? They bought a home for $400,000 back in 2006, maybe in 2000, actually it would have been 2004. You buy $400,000, goes up to 600,000, let's say in 2006 or 7, and they have $200,000 in equity. Well, then when the market turns, all that equity just vanishes. You see, they never could touch that money, right? And it's the same thing with the stock market right now. You have all these paper gains, and everybody was thinking, oh, look how rich I am. I have my 401k. I'm going to go ahead and retire a couple of years earlier. The stock market's been so good. They think it's going to keep going. But that's not what's happening, right? So let's say that baby boomer had $1 million in their account, their stock account, and they decide, hey, why wait? Let me go ahead and retire. I'll try to collect some Social Security or something on top of that and take out a little bit at a time. Well, that $1 million portfolio is collapsing, right? Especially if they have a 60-40 portfolio. So what you're going to see, I believe, are these job openings just start disappearing, right? Companies aren't going to be hiring. If there's no demand because the Fed's raising interest rates, those are going to disappear. But here's why I think the unemployment rate will rise without even considering any layoffs, right? So the people who are, I guess we'll call them unemployed, but they're not collecting unemployment insurance, right? They quit their job. We have a chart here for quits. So I overlaid the quits, total non-farm quits, with the total non-farm job openings, right? But on a percentage basis, change of year over year. And you can see, how well this is tracking each other. These quits are just in line with these job openings. Well, all these people who quit, they don't collect unemployment. So they aren't counted in that U3. They're not counted in the U6, right? They're not filing for unemployment. They can't. They quit their job. They're off collecting their money from their crypto sales or whatever, right? So all these people are going to start pouring back into the labor force. But as soon as they start looking for a job actively, and all these jobs for these job openings start to disappear because we're heading into this recession, all of a sudden they become active job seekers. And what's that mean? They will be counted in these reports and unemployment's going to rise. That's what I think is going to happen. You don't even need the layoffs to begin, although obviously that's going to put a lot more pressure on that number. And there are a lot of layoffs beginning. If you're in the mortgage industry, you're in trouble. Okay, this is not going to be good. I remember back in 2005 and 6 and 7, all of this really started. If you're paying attention, about midway through 2005, I was going to school to become a real estate agent. I remember sitting in my real estate finance class, and Mr. Walker, I'll never forget his name. He was a broker too, and he said, I got news for you all. You think you're going to become these real estate agents, but most of you aren't going to have a job soon. And I thought, what in the world is this guy talking about? And he started talking about how interest rates were lowered by Greenspan down to 1%, and it's causing this housing bubble, and it's going to blow up on all of us. And I started researching at that time. I ran into people like Robert Kiyosaki, and I realized this is going to happen, right? Peter Schiff, people like that. And I started studying more on the macroeconomics of everything, how these markets work and the real estate market. And about halfway through 2006, after I spent a good year, I realized this is going to happen, right? That's when you started seeing all these layoffs really start to pour in from the mortgage industry. It really began in 2006 and 7. You didn't really hear about all of this on a massive scale until the stock market had sold off in 2008. But I think what we're going to see is a very large increase in the unemployment number over the next couple of years, most of it due to these people coming back into the labor market. And remember, they can't collect unemployment either, right? Because they didn't lose their job due to some economic situation, right? They're losing their income due to an economic situation, but it's not from a company laying them off. They've quit their job, they retired early, right? So what job are they going to fill, right? It's going to be a game of musical chairs for jobs. And all of a sudden, these jobs that are sitting available, companies are going to have that upper hand again. But there are going to be industries that are really going to get hurt. I think one of them are going to be construction, anything to do with real estate. I think it's going to get hurt bad. I think if you're a new real estate agent right now, you'd want to be partnering up with someone who was around in that 2008 crisis, who really learned how to do short sales and bank-owned properties, start building those relationships with these banks that are going to end up with some of these portfolios. Maybe even people, let's say with BlackRock, right? These are huge places buying up a lot of properties, right? They probably borrowed money, but it's not like you have to get a bank loan to do this. These companies can borrow money at incredibly low interest rates, and they buy up a bunch of these properties, but they can liquidate these too, right? The stock market's coming down, and if I'm one of them, I'm thinking, hey, there's going to be incredible prices in the stock market. So they can change up their portfolios, liquidate some real estate, push down those prices, sure, but they can reinvest that in the stock market to rebalance a portfolio and have incredible gains on the way up. So they won't care if their real estate portfolio went down 25, 30%, right? If they're selling out why it's somewhat higher, at least a chunk of that, and they're rebuying into the stock market to make up that difference. So we'll see what happens with that. But I do believe real estate's going to be one of the industries that's hurt the most. This is a great site to go to. They do a good job on kind of the reports you hear. Let's make this a little bigger so you can see what it is. Reports you hear about the job cuts that are coming. Now, it's kind of funny, though. You see right here in February, job cuts report, hiring explodes as job cuts fall. But then, the next month, cuts jump 40%. And then up again, another 14% on top of that, original number. So I think we're in the beginning of that job cut process. This takes time. Too many people are caught up in the idea that, you said we were going to this recession, but you've been saying this for a couple of years, and a broken clock is right twice a day and all this stuff. But this is that's the wrong way to think about this. This is a forecast. You have to be able to look at these things and say, okay, over time, I could see where the market direction is likely to go. The probabilities increase or decrease based on decisions maybe in policy making with government, just the psychology of markets, war. I mean, that's just pretty basic. We understand that. And that's what some investors like myself have been noticing for a long time. Or we notice that the fundamentals are just jacked up, right? You can't go buy a house and use 50 or 60% of your gross income to be able to pay that mortgage, right? Nobody should lend you that money. If you have a real estate agent who is putting you in a home knowing that your gross income, it's 50% of your family's gross income is now going to your mortgage, I don't know. That's getting to a level where maybe it's unethical, or they're just not wise, right? I would never go back to that real estate agent again. Now, it is your own fault for taking that mortgage, maybe, right? But most banks, I think it's, maybe someone can correct me in the comments, I think it's between 30 or 38%. 38 would be on the high side of that, I believe, that they'd recommend you just kind of stay under these levels for your gross income versus your mortgage payment. But I think we're going into an interesting time. I think real estate's going to sell off. There will be great markets, areas in Florida that are probably still going to do fine. There'll be areas in Texas that are probably still going to do fine. But that's not to say, though, what if we have a credit crisis as the stock market's rolling over, right? That can cause a different issue in real estate, right? If you can't get these loans, if you remember what happened in 2009, it was kind of a different issue. So you're watching for those things, and you have to be able to pivot on your mindset of, okay, this is what's going to happen if they continue down this path. But if the Fed all of a sudden drops interest rates back to zero, right? They've only moved 75 basis points. It's really nothing. But if they stop, jawboning and talking about how they're going to raise rates, and the market will stop reacting to that, and interest rates will come collapsing back down. You'll probably see a huge run in the stock market. It'll maybe put a floor into real estate somewhat, right? So you have to be able to pivot on this game. Unfortunately, real estate's a very slow moving market. So that takes a while to collapse, but you're going to see those construction jobs and finance jobs involved in the real estate market really take a hit. So if I'm a real estate agent, I'm thinking about if I don't have experience, I need to connect with someone who does have that experience. I want to work under them, start asking questions, get on YouTube, start looking up stuff from 2009, 2010, 2011, how to work with banks on these bank-owned properties, maybe a portfolio that they have where you can sell, 100-something homes at a time. Start, getting some sort of knowledge on this, because it's going to be a slow-moving train wreck unless there's some sort of flip with government. Now, again, I say that these job numbers are going to come out high on unemployment. But again, we have to be able to think about with what the government just did in 2020, right? What if the government doesn't allow people to lose their homes, right? Which is crazy. I mean, to me, that's illegal, right? Those are private contracts. But with what they did, who's to say they won't, right? There's some harebrained crazy thing that they may come up with. We don't know. Maybe you're not even allowed to fire employees. I wouldn't put it past them anymore, right? Price controls are probably coming on food and gas. There's all kinds of things. But listening to the Fed talk, it sounds like they want this market to roll over. They believe it's overpriced, and they're going to use this as a way to fight inflation. I don't think it's a good way to fight inflation. I do believe you will see that rate of inflation come down, but that doesn't mean your prices go down. It's just the rate of increase goes down. And over the long term, they're going to continue inflating. They have to, because of the way our economic system's built here in the United States. It's really a joke. But yeah, I think that job cuts will continue to rise, but I think you're going to see the unemployment rate move dramatically and quickly, simply due to people coming back into the labor market that has been trading stocks, retiring early. They're going to come pouring back in at the same time the supply of job openings start to collapse, right? There's going to be companies filing bankruptcy. I mean, unless new PPP loans come out, or who knows what kind of program they're going to come out with. But I think that is the route that we're heading right now. But anyway, I just want to say, if you thought that this is good information, subscribe, like it, share it with a friend. If there's an ad that pops up, watch the ad. It's free content. Anyway, I hope this was helpful to you. I'm going to make some other videos here. Hopefully this week. I've been incredibly busy. Maybe I get some more done tomorrow and potentially Sunday. I guess that's the next week. I want to talk about a lot of stuff that's going on in the stock market right now. I'm just incredibly busy. But anyway, have a good one. I hope this was